Crude oil daily forecast, February 20th, fxempire.com. You can see that the crude market, light sweet crude market that is, had a relatively positive day as we bounced off of the 95 50 level and formed a pretty impressive looking hammer. The hammer is still within the constraints of the consolidation area, though. So really, there's only so much that can be read into it. It just looks like the market wants to consolidate here, go sideways, try to pick up new buyers, and break the 98 level in order to run to 100 and perhaps even higher if we can get enough momentum. At this moment in time, we've seen a fairly parabolic rise, and we need to grind sideways to attract those new forms of new flows of money into the marketplace. And as a result, we could be range trading for some time, and we have to recognize that we are stuck between 95 and 98. Although we do believe that a break of the highs from the session on Tuesday does lead to that 98 and could be taken by the shorter term, more um, nimble trader. Looking at the Brent markets, you can see that we've fallen quite a bit over the last couple of days, only to turn around and recoup those losses every session. This is the second hammer out of the last three candles that have formed, and you have to keep in mind that the candle from the previous session would have been the Monday candle, which of course was President's Day in America. So that really shows uh, hammer here, hammer here, and hammer here. So with all that being said, it does appear that the city traders that tend to push the Brent market around more are trying to break it out, and as such, we do think that the 118 level does get broken eventually. On a break of that 118 level, we believe that we will run to the 120 level, where a little bit more serious resistance could come into play. Obviously, with the tails that we see on these hammers right now, we don't really even have a scenario where we want to sell, as obviously every time it falls, somebody's willing to come in and bid it up.